Just click weekly reflections. On this episode, I'm going to reflect on this gold trade that I executed on Friday, NFP day, and on this account it happened to be a loss, but on my personal account, another account that I'm trading, I managed to win the trade execution from here all through up until here, targeting this liquidity that was resting below here. So this is the trade that I want to analyze today because it was the first time for me executing a trade on macros, the every hour macros, the 20-minute time duration where the algorithm tends to kick in and spool price towards a pool of or direct price towards a pool of liquidity. So this is the first trade because it's something that I've been back testing, watching it, seeing how it pans out, and I wanted to give it a go with this NFP and see how it will be. So going forward, see if I may include into my execution plans of my trading, just adding another confluence onto my executions. So coming back to the analysis of this trade, so gold has been crazily bullish with price taking out swing high and expanding up to the upside. So my higher time frame where I usually draw my buyers from is usually the 4H and the daily. So daily is like a wider map giving me the direction. Then on 4H I scale down a dealing range in regards to the buyers, whether the price needs to go up or lower, and according to this situation, price as it was continuing with its bullish trend, we managed to have a 4H FVG that's resting here. Let me just show it. There's a 4H FVG here, this one that was left once price displaced up above this swing high, creating another, and we have a swing low right here. This dealing range, this gap that was left when price displaced to the new highs here, and once we now displaced back below, once price generated its swing high, we displaced back below, disrespecting this inefficiency. Now these are very bearish or a bad sign for bulls, because it's supposed to support price, because since price is in a bullish trend, it's not supposed to be disrespected. It's supposed to be respected and support price, then propel price back higher. But on this case, we displaced through it with much more pressure or with much more power, creating a new intermediate swing low here. Have in mind this is the dealing range high and the dealing range low, intermediate swing low. So probably market may again sprang from here and continue going upwards. I don't know, you just have to wait and see. But again, it was supposed to hold price, but it didn't. Once it was displaced towards downward and we took out this intermediate swing low that's resting here, so I knew that the pressure towards the downside is really active, and I was waiting to execute a low trade around this area, around on that FVG. So I was waiting for price to come and find resistance around there, find some block going upwards so that I may execute a low trade. I wasn't really on the mood of targeting much lower since the bias is crazily upwards. So price may easily change the trajectory and proceed going upwards. So I was keen on just targeting an easier target, having in mind then we are still on the election mode, so prices are not yet stable because something might happen tomorrow, the election day. So I wasn't really hoping for much. So now going down lower, the 15 time H, Now, having that on mind, we can see now the 4HFEG projected up here, and this drop that really went down created this. Now is my structure time frame that I like to study price action from, so as I may execute from this time frame. Now, having that, we have this dealing range high and low. So the 4H was resting right at the equilibrium of the dealing range, and it was a key place for me to execute the trade from. So I was watching as price was going up. We were generating liquidity. Again, this equal lows liquidity. This low was patched here. We managed to take out this swing high here. So I was still patient. We had NFP around here. This green candle was the NFP candle. And one thing I noted with NFPs, we didn't manage to close above this swing high. We wicked up and we closed below it. So now I was really geared up for the bearish move, having in mind NFP didn't manage to close up above here. So I knew there will be a move to come and target all this pool of liquidity. Probably my original target was here, but I ended up bringing it up here on that another account. So with that, I was just patient and waiting to see what is going to unfold. So immediately I saw this candle engulf the previous candle. Now that was my trigger. Having in mind we had respected the equilibrium of this 4H VG, and by this time the 4H had already closed. The 4H closed were here. Yeah, the 4H closed here, having respect again the FEG. So this was a more added confluence for me that the trade was going lower. So once I saw this engulfment, I knew then let me gear up to enter into this trade. So as price was now retracing up, now was monitoring this on my execution time frame, of which was the 1 minute for this trade. So now going lower, we'll be now checking on that and see what happened in terms of the execution part of it. Having then said that, on this 1 minute time frame, now we have this market structure shift that happened here once we displaced here below this swing low. So that for me was crucial. So now I was waiting on this macro hour between 950 and 1010. I wanted to see what price action will do around this area. So one thing I noted is that we had some equal lows that were formed here between these and these. Already I had a mind of executing lower since we had already this down change in direction, displacing below here. So as market was coming up, was looking for another change in direction. We had equalized here, so my plan was if I will see this being patched just above and price displacing low, that would have been a very good sign, but that didn't happen. But what I observed is there was a fair value gap here between this candle and this one here was displaced downwards by this another candle. So that was another sign, a bearish sign that price is gearing up and going lower. Again, we came and we closed below this swing low here. So it wasn't much out of the woods yet because we still had this swing low to deal with. But again, I wasn't looking for it to hold much water as now price was gearing up to go bearish. So to me, this wasn't much of a concern. I was much really concerned on how price was taking up place up around here, having in mind then we are within that macro time. So I was really keen in seeing the price action here. So price came for this first, we respected this FEG around this, and then I executed on the next candle. Immediately this respected this FEG, I executed on the next one, a sell order, and here it is as the candle was opening. So price went well, we displaced below here very nicely, so that's a good sign. Having in mind again it's happening during the macro hour, it's a very good sign. So I had this FVG here selected where I added another position there here, actually here, Now, another thing with trading view, it usually combined positions and give you an average position for both of them. It doesn't display both of them, just gives an average of the two as well as the stop loss. So my stop loss, when I executed this trade, my stop loss was somewhere above here. You'll see it on the video that I'll link up. And once I executed this sell order, my sell stop now came down below here, upper to this FVG here, the overall stop loss for both the trades. So I didn't have much time to really push back the stop loss to where it needed to be, so I just let it there. I just let it rest, because according to me there was no need for price to come back again up here. The driving force was just going below, and on this candle here I was stopped out, and immediately price stopped me out. It ended up going to its intended direction. But on the other trades, on the other account, sorry, my stop loss remained firm up around here, and I was safe. And the price gravitated well, and I closed profits up around this candle here, because we were way within my target, what I was targeting. So the reason why I love this trade is because I executed it within the macro time, where the algorithm usually drives price below. And one thing you observed is during this macro time, any inefficiency that's formed there and it tends to be respected, it's something that I really need to focus on and execute towards that, having in mind that it was all relating to the trade plan that I had prior to price performing this price action around here. So it was a good trade. I loved it, and I kept observing it, and it went straight through to my target, though unfortunately here I was stopped out. But if I had managed to just leave my stop loss where it would have been, then I would still have been in profits. But yeah, that's it. So again, another reason for learning upon this trade weekly reflections is that now I've seen something that I'll be keen on the next trade that I'll be taking. But I really executing much more upon these ones. So that's it for these weekly reflections. We wait for this week and see what will unfold. I'm not sure if I'll manage to execute on this week, having in mind it's the election week. So today and tomorrow I'll just sit on my hands. Tomorrow being the election day, today being on a Monday, tomorrow being on a Tuesday the 5th. Wait and see what price action will unfold, and probably towards the end of week I might execute. I don't know. I'll just wait and see. If I happen to do something, then I'll definitely do something and have it recorded. That will be it for these weekly reflections. Cheers.